We'll start out with my traditional financial report. However, I think if anything else, it will serve as a point of comparison as we go forward in the coming months. Floyd, if you could advance me to the first slide. Great, thank you very much. So this chart I normally present to you shows you the status of comparing our actual HERF revenues to our forecasted revenues. And these numbers represent our numbers through March. So this chart will not have captured the experience that of COVID and the stay-at-home orders that we have been living under. So as of through March, we were a little bit below forecast, 0.9%, with about $1.2 billion in revenues received year to date. Gas tax, and I'm going to give you a little bit more detail here because I think it will serve as quite the contrast as we go forward in the coming months. Gas tax is about 3.6 above last year and 2.7% are above what our forecast was. Diesel also above last year by 2.1%, a little below forecast. So moving on to the regional area road fund, if you could advance the slide. It's important that you know that what is reflected here is regional area road fund revenues through February. So we are always a month behind our HERF revenues. Our HERF revenues were from March. These RARF revenue numbers are from February. As of February's numbers, we were above forecast to the tune of 2.2%, with February actuals 10.5% above the same period last year. Year to date, we've received about $333 million in revenues flowing into RARF at 8.3% growth year to date. So if we could move on to the next slide. So the federal aid program, Katie spoke to you a bit about that. What we have been doing over the last 3 to 4 weeks is trying to come up with some estimates in what has been revenue estimates in what has become the word of the year, unprecedented. I quite honestly am quite tired of this word because there is no good basis for the forecasts or the forecasting situation. In terms of the federal aid program, I'm going to touch on that for a moment. I am not revising the numbers on the federal aid program at this point. It is assumed that we will continue with the same federal formula level of federal formula funding that we built into the tentative program that was presented to the board. However, it should be noted as I go into the next few slides and talk to you about the impact to what we are estimating our HERF revenues to be, and thus our state highway fund revenues. It's important to understand that the Highway Trust Fund, which was forecasted to be in a deficit position as of the end of this year, is reliant on the same revenue sources that the Highway User Revenue Fund, our fund, is built on, and that is fuel taxes as well as fuel taxes largely. In the Highway Trust Fund, 95%, the Federal Highway Trust Fund, 95% of the revenues flowing into that fund are from fuel taxes. So it will be, you can anticipate that the deficit position that was a known issue will be accelerated as we deal with the people staying at home and driving less. If we could go into the next slide, I think I'll cover these items in the next slide. So, like I said, over the last few weeks, we have been trying to develop revenue estimates and financial impacts associated with COVID, and we are trying to base those on some logical and historical perspective, which we do not have. The bottom line here is we do not know what the COVID revenue impacts will be. We started off with thinking, okay, well, let's look at the Great Recession, but the Great Recession does not serve as a comparable model because it was not the immediate shock to the system of people staying at home. We eased into the, comparatively speaking, into the Great Recession compared to the COVID situation. Given that we have no historical perspective to drive this, what we have chosen to do, only recast the program for these first few years, FY20 through FY22, leaving the remaining years of the program unforecast at this point because it's difficult enough to just try and forecast the unknown for a couple of years, let alone say FY20 through 25. So what the numbers that I'm presenting you basically are just for the period of FY20 through FY22. We will revisit these numbers. Well, quite honestly, we're watching numbers daily, but we will firmly revisit these numbers in the next two months. And as Floyd mentioned to you earlier, the next steps of this will be to recast the tentative program based on these current numbers, knowing that this is a fluid situation. So, as I said, these forecasts are extremely speculative, and we're seeing information changing weekly. To give you some perspective on that, I think it was last week we had 3 weeks of unemployment claims that put us at about 17 million. This fourth week, we are now up to 22 million unemployment claims. That implies an unemployment rate of approximately 17%. In my world, that's goosebump material. This is just a shocking time. The approach we've taken in these towards these estimates and the approach we will need to take as we recast the program is to preserve cash when you are in a situation in which you have no way of forecasting what is to come. The approach is to preserve your most liquid and flexible fund source. So we are looking to preserve cash so we can not only respond to the situations that are dealt to us, but deal with matching our federal funds and so forth. Our best estimate, you can see here on the screen, which best estimate, also known as guess, for our HERF revenues is in FY20, the current year, with only these few remaining months, we are forecasting a 9% decline in revenues. In FY21, a 22% decline in revenues, and in FY22, a 12% decline. The way we've approached this is we have significantly diminished our forecasts for gas tax or fuel tax revenues, particularly gas tax in these first few months, starting to see coming out of those significant declines in the November time, the October-November time frame. VLT, similar situation. We are estimating more declines in the initial months, and then starting to see minor bits of recovery in the months November forward. We can move to the next slide. Excuse me, Floyd. So what this means in terms of dollars, these revised estimates, the impact to the state highway fund, our estimated impact to the state highway fund, is diminished revenues available to the tune of $385 million. However, the state highway, given the diminished forecasts for the state highway fund, this impacts our bond program. So if we could proceed to the next slide. The municipal bond, subsequent to this slide being developed, the municipal bond market has settled some. However, there has been very, very limited demand for bonds. In the last 4 weeks, we have watched investors sell off and convert to cash. People are focused on having cash in hand, and they are, as such, there's very, very limited demand for bonds on the market. To put this into perspective, last week alone, there was $2.3 billion flowing out of the bond market. Typically, we would see monies coming into the market, 6 to 8 billion. This is a highly unusual situation. Last week, we saw our first inflows into the market, demands for dollars, and that only totaled $833 million. That is a very small number when you are talking about the overall municipal bond market. In light of the situation that we have declining state highway fund dollars available, declining revenues there, and keep in mind that those state highway fund dollars serve to pay our debt service. They serve as what we leverage, the revenue source we leverage against in order to purchase bonds. So in light of those declining revenues, in light of higher costs of capital because there is less demand for bonds, many issuers, like ADOT, are choosing to defer planned bond issues. So in addition to the declining revenues, the number I just communicated to you, $355 million, in addition, we are deferring planned bond issues to the tune of $155 million. The combined impact of this is, my goodness, I can't see my own screen, is a $540 million impact to the tentative 5-year program. Our next steps in this are, first, our continued analysis of the data as it is flowing in. But then we need to develop solutions and recast the tentative program given these new revenue figures. That tentative program includes, as one of the speakers discussed, our aeronautics program. Like our traditional process for development of the tentative program, we will in the next week